Okay, let's take a look at this pattern here. We're looking at the pound to the dollar right now, and this is a current chart actually. You see the trend line here, this white trend line, and then you have this heavy move to the downside. That's the bump up here. Let me give you a little shot here so you can see it. Okay, this red arrow, this arrow here is showing where the bump occurred, and then this trend line where this arrow is showing the run. See how it ran off? And then this blue arrow is just showing you where the ultimate resistance in the trend is going to be. Now, taking in mind that here on this move here to the downside, let's zoom in, let's get a little better look here. You still can put this line here. Oh, I'm sorry, I got the wrong kind of line. Close that. Alright. This line that you've got going here, this trend line to the upside that we started, looks like we had a little move to a bullish correction, bull push to the upside, trying to correct on all that short that we had going on, is now, once this low, as I talked to you about earlier, once this low down here gets breached, that's officiating the new trend back to the downside. This is a transitional candle. If it does not breach this low, it may continue on. Also, you might want to notice that where we're at, just fundamental, not fundamental, but technically speaking, is that we have this retracement showing us that we've got prices touching 618 pretty much. There's the 618 line. It didn't quite touch it, but almost did. It's between the 50 and the 618. So it could actually touch this 618 at 79.18 and take off. If it does that, then we'll have to readjust this trend line to look like this. And that would be an actual possibility that could create, along with some fundamentals, the possibility of a new bump and run in the other direction. It's possible. I doubt it because of this trend line here is strong. If it'll probably hit it and come back without creating a bump and run. But if, let's say on the fundamental side, let's say that Congress passes the bill tomorrow, or something happens and everybody goes hooray, we might see a bump and run on this going to the upside. We might get a bump and run going long where it'll do this. You know, the price will just fly up along this line or some derivative thereof, okay? And then we'll get a long move that's bumping running to the upside. That's, you know, I don't see that happening, but that's only my personal opinion. And your opinion, there's no room for it in the market. Trust me. You just simply have to let the chart do the talking, and you have to do the listening. You got to make sure you get the memo, okay? So that's what's happening. That's a bump and run pattern. Let me show you something else where you can get deceived into thinking it's a bump and run pattern and it's not. For example, let's see if we can find something here. Hold on a second. Okay, you could easily, some people could easily get tricked into thinking that this right here was the beginning of a bump and run pattern here when it went like this. But as you can see, it quickly began to channel, which really negates the bump and run pattern. See, it began to channel across here. Then it broke out, but never, and then came back and retested. Now, this is no longer a bump and run. Okay, it's just a continuation of the up move, but it's not a bump and run. Okay, I'm trying to find the handle to this thing. There we go. It's not a bump and run. Okay. The other thing is if you notice, just in terms of, we talked about the channeling thing too, in terms of the breakout, there was a close. This right here is a close above that channel. Let's zoom in so you can see a little closer. Look at that. It closed above the trend line. And I'm sure there were a lot of people that said, yay! And then it made a small gap up above it going, yay, we're going long. Back down and hit the bottom of the channel before going long again. There's a lot of traders that bailed and jumped ship before they could realize their profit. Meanwhile, an astute trader who uses their tools would have said, well, I'm either going to look for the bottom of this channel, but really more realistically, I would probably say they were setting up some Fibonacci, some form of Gann maybe, and went for a retracement, such as somewhere around here or here. This is the 75. We wouldn't have put it here. 618 would have been 203.47, and putting their stop underneath these lows here. Probably this low, 201.95, which is not a big difference. 203.47. 202.30. We're talking about the pound now, okay? So you got to have some good move pockets there. I mean, the average stop range on the pound is something like 118 pips. So this low, 202.55, 202.55. Yeah, getting under that 202.55 would have been enough, but probably better to get under that low at 202, 201.99 or something. So that's a steep move. But you see what happened once we got past all of that. That's a big fat channel there, baby. So, but you see what happened. And then it closed again after getting that momentum. See, it hadn't really touched down bottom until 1, 2, 3, 4, 5 days it took to get there. Then it had to come down and bounce and get some strength, and away it went on up till we reached a point of resistance at 211, which was a very crucial. I remember this on the pound. I remember mentioning this 211 area. Actually, I had it around about 211 something, like 211.18 or something. Was like, man, this thing's going to crash when it hits 211.18. And this was back in 2006 or 7 or so. But that was a long time ago. Anyway, that's the bump and run, and that's the channel, and I hope I explained. Oh yeah, I've got something else I need to talk to you about. I'll do that in another segment. We'll deal with that daily thing you were talking about.